I'm Bronwyn Williams, and we're back with a small print. And today my guest is Russell Lamberti. So to start off with, we always ask our guests to please introduce yourself the way you would like to be introduced.
Thanks, Bronwyn. I'm a professional economist. I live in Cape Town. I'm a family man. I think a lot about the state of the world and how kind of great and messed up so many things are. I am soon to be moving to a new role at Carte. So I've been advising professional investors for about 15 years or so now, moving into a different role at Carte in September. Carte is a business advocacy group in South Africa, really working towards an overarching goal of creating the institutional groundwork, laying the institutional groundwork to allow businesses to state-proof themselves effectively. So it's really interesting. It's intellectually, quite fascinating what we're going to be doing, working with a great team over there. So it's quite a pivot for me in terms of what I've been doing so far. But my speciality really is macroeconomic strategy, monetary policy, monetary economics, the intersection between that and, I suppose, politics and culture and society. So, and I have broad interests beyond all that stuff in terms of, theology and sociology and just how the world kind of generally all fits together in this very complex puzzle. So that's sort of me in a very imperfect nutshell.
Well, that's what economics is, right? So, it is looking at human behavior. It's the sum total of all of our choices, whether they are good ones or bad ones. I think that economics gets a lot of a bad rap for people have an assumption that economists impose economics onto society rather than using economic tools as a way to hold a mirror up to society. And there is a bit of a conflation there between the more normative and positive sides of the industry, which we'll get into. But I always like to stand up for the profession because I think economic tools have got too bad of a reputation in a marketplace that could really deal with them right now. And the reason why I invited you on the show is because at the moment we have inflation and rumors of inflation, much like we've always had wars and rumors of wars across society. And it seems to be that whole concept of inflation is back on the table. And it is quite a polarizing topic for some reason, that the world seems divided, at least those that do play around with sort of financial Twitter and social media, that there's the pro-inflation crowd and the anti-inflation crowd, and people think it's quite a dangerous thing, that we are heading into territory that could be quite destructive of wealth, and other people that are brushing it off as being something that's not going to be a problem for our generation, that we can kick this can much further down the road. So I invited you specifically because a couple of years back, you wrote the book, which you can actually see behind you over there, Money Destroys Nations, which is a fascinating read. I would recommend people do go and read it. It's got lots of very quotable one-liners that you can just put straight into your own Twitter feed. And of course, that talks about extraordinary levels of hyperinflation, like what happens in Zimbabwe. That is an abnormal case. Most instances of hyperinflation don't get to quite that point. I think what was the total amount of inflation that reached there in the early noughties? Something like
it's an unmemorizable
number.
Yeah.
Like, what is it? 9 zeros?
I think it was, it was, I mean, it's heptillion or septillion or something. It's not
heptillion-ish percent, which is just, it's beyond comprehension.
Beyond a certain level, it doesn't even matter. The money's becoming worthless. That's the bottom line.
Yeah. The money, it destroyed itself and then proceeded to destroy the nation. So perhaps we can start off over there with, what is your perspective right now? Because a few years on from when you wrote that book, and finally now we're getting some inflationary figures that are coming out of the data, coming out of particularly the United States. I'm not sure if it's quite reflecting to the same degree in South Africa. We've always had a slightly higher general basic inflation level. But what do you think? Are we reaching a turning point? Are we heading to a new era of monetary policy, that we're going, not just the policy, but monetary experience that we're going to have? Is inflation something that global citizens should be concerned of? That's really any marketplace that is connected with the magical dollar and its magical monopoly money. And from a local perspective, is it something that South Africans should be concerned about? And if so, why? So if you could answer that question both ways, from the global dollar perspective and from the local rand-based perspective.
Well, I mean, right off the bat, you've hit me with a huge poser, because this is very much the raging debate amongst financial professionals right now, and really kind of across all sorts of spectra in society. So it's not an easy one, and I could probably babble on for 20 minutes and not really give you a definitive answer on it. But I mean, let me just reflect a little bit on what you said in the preamble to your question, and then kind of segue into trying to stab at an answer to this question. You pointed out that what happened in Zimbabwe is an outlier, is a very extreme event. And I think that's an important point to make, because what we don't want to be doing is finding hyperinflation under every, carpet. We want to, or under every bed. We want to be judicious in the way that we perceive the risk, in the way that we assess the risk of certainly hyperinflation, but even just very high inflation. It's very important for people to understand that to achieve sustained high rates of inflation requires very deep political dysfunction. Ultimately, when governments control money supply, and when once you understand that money supply is the fountain of inflation, it's where it originates from. Then you start to be able to piece together the kinds of conditions that foster prolonged high inflation. When you get into very high inflation scenarios and ultimately these sort of ridiculous hyperinflation scenarios, what you're looking at there is essentially the corollary of abject political decay and corruption. So you must understand just how broken Zimbabwe's political system had become. The same is true of Weimar Germany, right? These places became deeply, deeply dysfunctional. And that's a chaotic process that can give rise to all sorts of, interesting scenarios. In Zimbabwe's case, interestingly, and quite rarely in some ways, the regime basically was able to sort of sustain and carry on through the hyperinflation. But the result was essentially mass exodus of skills, which has effectively broken the country from a long-term perspective. In the case of Weimar, you got the 1930s and the 1940s as the sort of consequence of that disaster, which we all know. We don't need to go into what happened there. So these are incredibly chaotic events. Now, the reason why we study them, I think, and I'll draw this into the question now, is not because we are trying to predict ultra chaotic scenarios all the time, but the very extreme scenario is a brilliant archetype for us to start drawing lessons about the effects of inflation, about the social effects of inflation, and about how inflation is caused. And I think that's where the value of studying a place like Zimbabwe really comes in. So when we look at the world right now, I think we can intellectualize this debate, till the cows come home, and there's lots of good reasons for being skeptical of the rapid onset inflation view. Okay, and one of the reasons for that is that we do have a system of immense leverage in our banking and financial systems, and that's always prone to kind of collapsing in on itself a little bit. It's a little bit of a precarious network of debt. Okay, and when you have that, you have you always have the risk of a sort of what we call a debt deflation, where people default on loans. There's a sort of calling in of credit by banks as they seek to shore up their balance sheets and restore their sort of capital buffers. And so the deflationist argument is always essentially around this overarching structural reality of our system right now, which is that it's built on a huge house of credit. And when you start sort of chopping the legs out from underneath that, it can kind of collapse in on itself a bit. And that, when we start seeing financial dysfunction and financial crises, 2008, the COVID situation, which was obviously not at its genesis a financial problem, but then spilled over into the financial markets. you see these deflation effects showing up very rapidly and very quickly. And so a year ago, we were in a kind of deflation. Prices were falling. And I think it's this lingering concern about the collapse of leverage and about the precariousness of this, let's say, to some extent, a house of cards of leverage that sustains this deflation argument. The inflationists are looking at a whole bunch of other areas that are really concerning them now more than has done in the recent past. The obvious one is we've locked the world down. And so we've, taken a sledgehammer to supply chains, to productive potential. And so we're curtailing supply in so many areas. If you look at Purchasing Manager Index, PMI surveys, the one thing that stands out absolutely clearly is that the supply constraints and supply side price pressures are immense. If you look at freight data and shipping container pricing data, you've just got a huge shortage of shipping space going on at the moment. I think shipping prices, depending on the metric you're looking at, depending on the index you're looking at, are up anywhere between 5 and sort of 10 times the level they were at just about 12, 18 months ago. So just an enormous inflation in supply side costs. So there's no great mystery as to why that's happened. We've shut large parts of the global production system down across many countries. And most of the countries that didn't have major shutdowns aren't particularly highly productive nations as far as the global stage is concerned. So a lot of African countries didn't shut down, but not much production happens out of Africa. And so that's the one thing we've done on that side. And then on the demand side, we really have printed a lot of money across the globe. The United States Federal Reserve has obviously been front and center in that. The quantum, depending on the money metric that you're looking at, is probably in the order of about $6 or $7 trillion added to global money supply, which is a very, very big number. It's something like 40% year-on-year growth in the money supply. Now, immediately, we must just quickly say that when you get hyperinflations, the sort of quantums of money supply injections into the system are of many orders of magnitude higher than that, right? A 40% money supply injection is very, very big, no question about it, but it's not something that necessarily must elicit hyperinflation. The other mitigating factor there is that there are ways in which that money supply expansion can get sort of absorbed away from manifesting in goods and services prices. And obviously the most obvious way that happens is that it gets absorbed into asset markets, okay? And so that's, I think, where we're seeing still a lot of the inflation. It's also spilling into commodity speculation. So we're seeing house prices, I think it was in the Netherlands, just to take a very random example, Dutch house prices are up about 20% year on year, okay, from what is almost certainly an already very expensive level. I doubt property in Holland was cheap before COVID. Now it's just gotten 20% more dear. And you're seeing house price speculation, you're seeing equity price speculation. So inflation in many ways is everywhere, okay? Everywhere you look, I think you can just about see inflation in commodities, and it's starting to seep now into goods and services prices. And it's more than just base effects from last year. It's actually something that's coming through. No one's really denying that. The debate is, how long is this going to persist and how long is this going to last? Now, just to finish the question on the US and on the global perspective, I think that one's got to be careful not to get too bogged down in trying to predict where this is all going to go. I think you've got to use tools that give you a fairly clear perspective on the short-term horizon. You've kind of got to play it as it lies. And certainly from an investment perspective, you've got to iterate just as you go. Right now, inflation is there. It's manifesting, and it's manifesting for very good theoretical reasons. We've curtailed supply and we've printed money, right? So there's not a whole lot of goods and services coming on stream. And there's a lot more money chasing those goods and services, if you like to put it in good old Ecos 101 terms. And so the inflation is certainly there. Now, here's the crux of this inflation deflation debate, and I'll sort of wrap it up, else we'll get too geeky. The deflationists are expecting this sort of credit implosion or this managed sort of credit deflation situation over the next few years. But I think what they're underestimating is the decay that we're seeing in the political system that starts to align incentives towards what we call monetizing that credit structure. Okay, so you have this precarious credit structure that can deflate. But if you print money and essentially monetize that debt, if you monetize government debts and if you monetize lots of private sector debts, it stops being able to crash in on itself and implode. You actually fill it up with real money, okay? And that's basically where a place like Zimbabwe ended up getting to. Zimbabwe had a normal functioning credit-based banking system. It had big deflation events that were then filled up with printed money. And so you essentially get rid of the debt deflation risk by monetizing that credit, okay? And I think that's the cycle we're on. I think you can see it. That's precisely what QE is. That's what the Fed buying, private company bonds is. That's what all this stuff is. And that's also what starts to happen when you start getting checks in the mail to households, right? You start essentially papering over all this credit structure.
The helicopter money.
Correct. And you start creating these sorts of inflation risks. And I think that the deflationists, whilst they could certainly be right for short periods of time as we go through these gyrations, I think what they're missing is that the severe extent of our deflation potential is precisely actually what's driving politicians and central banks to push exceptionally hard against that. And I think that if they continue down that road, they can basically always win. The inflation outcome can always prevail because they just have the printing press. So I think we're in an inflation world. I think we're in a world of increasing scarcity, and the money creation is not going to just end by the central banks. They've got ongoing political incentive to, I think, keep printing money. And I haven't even begun, Bronwyn, to talk about, and I won't at this juncture, but we haven't even begun to talk about Green New Deals, the anti-fossil fuel stuff, all the stuff that is essentially anti-growth, or what you might call degrowth, the kind of degrowth idea. And that sort of degrowth stuff is hugely constraining on the supply side. And I'm not convinced, all things considered, that we're moving into a period, at least for a while, of particularly impressive technological growth or technological advance. Now, I think that there's a ton of interesting and fascinating technologies, but I'm not convinced that at the margin we are making the big kinds of technological strides that would typically be associated with deflation or disinflation in the good sense, in the sense of making stuff more efficient, more cheaper, and so on, in the way that like creating railways across America was just an enormous improvement upon horse and carriage across America, right? And that's the kind of fairly epic technological changes that I think we probably are not seeing at the moment. I think we probably overestimate, because it's such clever technology that we have today. We might be overestimating its marginal benefits to us. So that's something we could debate and talk about. As far as South Africa is concerned, what's so fascinating right now, this might be an interesting little tidbit for people watching, is that as far as I can tell, inflation risk looks a lot more pressing in America than it does in South Africa right now. American money supply growth is a lot higher. The rand has been on a pretty strong run, which kind of diminishes import costs. It doesn't mean that those risks are not lurking for SA. We're running a big fiscal deficit, which can prompt our politicians to start meddling with the central bank.
Very
start
tempting.
going down that road. Very, very tempting, and something we've got to keep a super close eye on. But right now, when you sort of look at the broad span of things, based on our kind of historical experience with inflation, South Africa doesn't seem like it's primed just yet for a bad inflation outcome. The real inflation risks that I can see actually do emanate predominantly from the United States. And I think what's really fascinating about that, and this is where I'll close my answer, is I think that has a kind of political corollary. I think what we're seeing in America is a sort of the politics of inflation really heating up. And that's what MMT is about. That's what this kind of real leftward shift is about. That's, Biden, the sort of managed president by the Democrats, very much shifting towards this very populist, inflationist type thinking. Donald Trump, in a way, was the start of that, actually. So there's kind of this like bipartisan consensus on this. Trump ran huge deficits, was not scared of debt, as he boasted, and printed loads of money under his tenure. And I think with Biden, it's actually ratcheting up rather than ratcheting down.
Yeah, that's a very interesting point. But let's talk about what inflation really means, because I know people's eyes glaze over when you start throwing economic terms around, particularly people who aren't like us that actually like reading this sort of stuff and looking at the charts and numbers. It's not for everyone. I think there's 2 points I wanted to pick up on what a world of inflation actually does. I think that there's a misconception that inflation is just about stuff getting more expensive. That's not even entirely true, because what inflation really is distorting the marketplace so that some things get more expensive compared to other things, and some people get richer out of the process compared to other things. Money is just money. It distorts market and allocates real market assets, but it doesn't actually have intrinsic value. That's the whole point of money. And we can get into the crypto conversation a bit later, because that's got a slightly different spin on it. But money as we know it is not real goods and services. It's a proxy for the distribution thereof. So in an inflationary environment, some people get richer, some people get poorer, some people benefit, some people don't. And it happens in different waves and stages. And you might be winning today and losing tomorrow, as you cover very, very nicely in your book. Exporters and importers, one's laughing while the other's crying, but someone is getting richer and someone is getting poorer. So it's got distortionary effects. And in a world where inequality is trending upwards, that's something we should be concerned about. And then from a slightly more theoretical level, what inflation really does, when you talk about the biggest distortion that you get, is that it is in essence an expropriation of real value from the private sector towards whoever gets to print the money, which in our current economies would be the nation state that has the monopoly over the printing press and the monopoly over the guns and the men with guns to enforce the sort of belief in that currency itself and that buy-in into that system. So what are your thoughts on the distortionary effects of inflation? In other words, the real effects of inflation, as in who are those winners in this particular cycle and who are those losers? And I think the MMT question is an interesting one there. We have had guests on the show before that unpack that and are actually quite pro the MMT idea. And of course, everyone's entitled to their opinions there. And there are people that will win from that sort of process, because that's what happens when you mess around with money. You create new winners and new losers. And the new winners will, of course, be quite happy with those sorts of policies. So as always, in any sort of crime, and that's kind of what it is, because it's stealing from some and giving to another, you want to follow the money. So who stands to gain from a more inflationary, and you were talking about the dollar, so let's talk about that perspective. Who in terms of which sectors of the private sector economy, who in terms of public sector versus private sector, and who in terms of which nation states win and which ones don't? I think as an emerging market citizen, a lot of people watching this should be more interested in what the dollar is doing, because that expropriation isn't just from the private sector to the public sector, it's also from certain geographic territories towards others. So I'm not going to put ideas in your mouth. Maybe you could give our listeners a more educated opinion on who that is.
Well, look,
got the motive.
Yeah, you've set that up superbly, and a lot of what you've said there, I would struggle to say better. I once wrote an article a good number of years ago now, and I think it was called something like "Inflation is a Wealth Redistribution Scheme." So yes, money gets printed, prices go up, but really, inflation is a system of political privilege, political and kind of corporate crony privilege, and as you pointed out, whoever, and this is known as the Cantillon effect, named after an economist called Richard Cantillon, whoever gets to print the money first and use it first gets to get the stuff, right? If you and I could sneak into a basement, print up a whole lot of money, print up R1 billion each, that no one knew where it came from, and I suppose packed it in a whole bunch of suitcases, we could go out and acquire lots of stuff, right? Bronwyn and Russell could go and own farms. We could own factories. We could, do all sorts of stuff. all the things, and really, and if no one knew how we came about that money, we can essentially just steal stuff from people, and it looks voluntary. It looks all above board as well, which is
That's
particularly
trade.
pernicious. It was just trade, exactly. So
Mm.
that's the essence of why inflation is such a problem. This the secondary stuff is also very important, which is that because of that, and when it's done on a wide enough scale. So if you and I did it with R1 billion each in an economy like South Africa or like the United States, it would actually just about go unnoticed. But when you do it on massive scale, it starts to have really big distortionary effects on all kinds of markets. It starts to, I mean, for example, one of the chronic problems of having the banking system set up in the way that it is and being a sort of, I suppose, fountainhead of inflation, is that you have major distortions in real estate markets. Okay, and over long periods of time, you get considerable over allocation of wealth into real estate. So you've got lots of people sitting with most of their wealth and most of their savings in their house, which I think, historically speaking, is a major distortion. I don't think it's normal that everything is riding on your place of residence, which in the final analysis is really just kind of a long-term consumer good. But we've turned it into kind of a piggy bank, an investment, a retirement policy, and all this kind of stuff. So
We
real estate
monetize the debts.
yeah. So real estate is one example where you have significant distortions. So who's benefited from that kind of long-term process? It's people involved in that sector. It's people who are willing to leverage, to go into debt, to own houses. It's real estate developers. It's banks. It's that whole ecosystem that has tended to benefit in that way. If you have not borrowed to buy a house, let's say in the last 20 years, and you've really struggled to kind of keep up with the Joneses, right? People who've gone into debt, ridden those waves, been part of these big bubble cycles. I mean, they can also be prone to crashing and sort of losing everything. But once you get on that rung, you can do exceptionally well. So the beneficiaries of inflation are the already connected, the people who can access credit, the people who know how to play the game, who can go and get bank finance, who can buy houses, who have paychecks already. And the people who lose out are the people who can't do that, and that cuts across a whole bunch of things. One of the gaps is generational, right? I mean, younger generations have really struggled to get on the property rung. Property prices for a young, let's say 26-year-old couple who's just gotten married, who wants to buy their first house, versus the same equivalent couple in the 1970s. I mean, the relative cost of housing for those two different couples is enormously different. It's extremely expensive now.
But there's another point there. I'm just going to jump in because I think it's interesting to add to this conversation around who wins and who loses. It's not just that older generations didn't have perhaps as much debt that had inflated and inflation that had inflated house prices themselves. They're also now competing with a different sort of investor. Sort of a couple of generations ago, you were competing with other retail buyers of property to own a house. And now what you're starting to see is the very big investment companies and investment banks are buying up residential properties as investments. And of course, investment banks are closer to that tasty money tap, right? So there's so I think that's worth interjecting just in that little.
No, well, I'm glad you've raised that, because it allows us to kind of then show how that housing market then links into this broader sort of let's call it money tree sort of process. So someone, so whether it's BlackRock or some other massive investment fund. So what's going on? You've got central banks. You've got central banks who've squashed interest rates down to zero or close to it, printing huge amounts of money. So bond markets and equity markets inflate to levels where the return from them just disappears. So prices go up and the yield you earn from those investments falls towards zero. But But of course, your clients who are savers and investors with, in your firm, or your shareholders, they need income, they need return. This is, we're not here for fun. We had to earn some money, we had to earn some income. We're saving for a purpose. And so these funds then go prowling around for where they can find income, where they can find yield. And they're essentially in the process, and this is what this is doing, this incessant money printing and inflating of multiple asset bubbles is causing in big investment firms to go on the prowl and squash returns everywhere else, right? Or to extract returns from other places until they've been dissipated. So a big investment firm will look at residential property, will look at a portfolio of, let's say, 1,000 homes, and we'll say, right, if we buy these 1,000 homes for a few million rand each, that's X billion rand that we're going to have to pile into this investment. This is the kind of rental yield we can get from this investment, minus some default risk, blah blah blah. We're going to clear 5% rental yield. And what's the bond market giving us? It's giving us 1% over the same term, and or less in many countries. And what is the equity market giving us? Very little and very volatile, and so on. So you got these guys now piling into houses, and precisely as you say, I mean, they get preferential funding. These are huge firms connected to banks, connected to investment banks in the banking system, and central banks finance these firms through essentially money printing and manipulation of rates. And so you have an absolutely distorted system, and this is what is really, to be blunt, pissing people off, right? Is that you're getting this enormous concentration of wealth and real economic power. This is this wealth redistribution scheme that inflation effectively is. So it's an excellent
nothing,
point that
we'll
you
be
raised.
happy.
Yeah, exactly. It's this idea that there's just going to be some sort of big oligarchical custodianship thing going on where they own and control. They might not even call it ownership because it might be politically sensitive, but effectively
Neo-feudalism.
It is a kind of, it is like that. And I think it's, the problem is that when you raise this issue with a lot of, let's say, libertarians or free marketers, they're kind of like, what's the problem? These are private companies
but they're not funded by private enterprise. They're funded by a corrupt system, which is socialism, but coming at it from a very different way. It's like the worst of both communism and capitalism. I think that from someone like myself who does tend to skew quite libertarian, but not enough to actually put the capital L on my head.
Yeah.
There are things to be said that some of the ideas behind communism are quite lovely, looking after each other and all of that. In practice, it doesn't work out that way. Likewise, some of the ideas about capitalism, about free markets and free trade are great, but in practice doesn't always turn out the way it does on paper. I think what we've got at the moment is this bastardized system of the worst of both worlds. So you've got sort of, socialism for the rich and capitalism for the poor, which is a joke. And that's why we can't find middle ground across political ideology, because we have the worst of two imperfect to start off with systems.
I think what you've called this in the past is financial socialism, and I think that's a pretty good moniker for the sort of system that we're living in. It's sophisticated socialism. It's refined. It's not the boorish type where you go and run and take over factories and kill capitalists. You just infiltrate these commanding heights, like the central bank, like the treasury, and you start being able to fuse these things together in very cryptic, insidious, kind of pernicious ways that most people can't diagnose. And I think this is it. This is critical stuff that's going on right now. When the analogy, like, so to call these things free markets and to sort of excuse behavior because it's quote unquote free,
anything but
would be like it would be like someone changing the rules of a sports match. So now in rugby, you can pass the ball forward, right? And then let the players go and do what they do. And you've got all sorts of crazy stuff going on. They're obeying the rules. They're working within the structure that's been set up for them. The problem is that the structure is completely distorted.
But it gets worse than that. I mean, what we're seeing now, in essence, when you start talking about the fact that the government is the monopoly over printing money and has the first drink at the fountain, what you're in essence seeing is the referee getting on the field, right? And then still making the calls while they're there. So I think there's also that's to be noted, that this is talking about more competition with the people who get to control the policies, with the people who have to abide by the policies.
Correct.
Which is obviously perverse.
Yeah, so you've got this major revolving door situation where you know, private business owners and shareholders are able to influence regulators. Regulators in turn are able to set the rules in various distortionary ways. And I mean, to see that this is, you know, a huge problem from an equality perspective, from the perspective of concentrating wealth and power, from the perspective of just pure justice of how markets are supposed to work, and from the perspective of how we are creating this undeserving, in many instances, oligarchy. Now here's what
unelected, undeserved, yeah.
And here's what you can then throw into the mix, and this is really where it gets quite spicy, is that the man on the street hitherto has struggled to diagnose all this stuff. I think that's changing. I think that the way we've been able to democratize knowledge and insight over the last 25 years or so through the web and through all the, you know, amazing information technology that we have, people are starting to put the puzzle pieces together. It's not clear for everyone, and not everyone agrees on exactly the sort of diagnosis of the problem. But it's interesting. I think you're starting to see a coming together of traditional left and right on a lot of these issues, right? There's a lot of people who would be traditionally left-wing or traditionally on the left or traditionally kind of socialist. And then a lot of people who are traditionally, let's say, on the right or libertarian, and a lot of them are starting to find common ground because, hang on a minute, there's like this superstructure oligarchy here that's actually, you know, being unfair to all of us. Exactly. 100%. And so, you know, that's a really interesting political dynamic for me. And I think it's one of the explanations for why political maps are being so redrawn in such confusing ways for people, right? So you've got like the sort of landslide for the Conservatives in the UK amongst traditionally Labour constituencies up in the north. I think that's a symptom of this. I mean, there's other cultural kind of dynamics to that as well that we could get into, but you're seeing a similar thing in the US. You know, it's been pointed out that a sort of diehard Trump fan and a diehard Bernie Sanders fan, you're probably gonna they're probably gonna line up on like 70 or 80% of things, you know. So this to me is creating a real cauldron of backlash. And I think we're living it. I think we're living that in all sorts of ways. Institutional trust is evaporating because of this. It's becoming impossible to hide these sorts of injustices, right? We've got such, despite all the distortions and the censoring and the blocking and all this kind of stuff, the internet's in a very, very powerful truth-finding machine. And you've got this stuff essentially being laid bare for most people. And so that's a very interesting one for me, because I think it's starting to crack this nut open a little bit, and it's starting to lay these things bare. And just one area of that, imperfect and messy and sort of complex as it is cryptocurrency, right?
Yep.
Whatever you want to say about it, it is an attempt, and certainly at this stage, a growing and seemingly increasingly successful attempt to wrestle back monetary sovereignty back to the individual, back to the community, back to the corporation. There's all sorts of ways in which the state is going to react to that. Central bank digital currencies are the obvious kind of one line of defense where that's going to come in. And so we're in a kind of monetary warfare now that's very different to what we've seen through historical epochs. The old stuff was one superpower trying to usurp monetary control over another superpower. And when it moved from Britain to the United States, I suppose that was kind of a transition between allies, a sort of more peaceful transition between the two of them, although it took a couple of world wars to get there. But now we're kind of seeing a monetary epochal battle, less between states. So I think the China, Russia, America currency axis is interesting, but I think it's less interesting for me than the decentralized, centralized currency fight that's going on. That to me is extremely interesting. And in an inflationary world, yes, the winners, as long as there's asset price inflation, and as long as central banks are pumping money into the financial sector, bailing out banks and all that kind of stuff, yes, your winners are kind of obvious. It's these big institutions, these big centralized financial institutions. But there's two ways in which I think power is going to be wrestled from that. The one is the cryptocurrency revolution. That's going to be super messy. That's not going to be quick. It's already 10 years old, and it's going to be another 20 to 30 years of unfolding. Okay.
Yeah.
I mean, the first internet, was in the 1960s, right? And it only becomes like an adopted thing really globally in the 2000s, effectively. So these things take time. The second dimension on which I think power can be sort of wrestled away from the oligarchs is when inflation escapes the asset markets. Okay. And this is not something that can be easily controlled by the string pullers at the top. Okay. This is a chaotic system. It's a complex system. So most of the inflation of the last 20 or 30 years has gone into asset markets. House prices have far outstripped wage growth. Equity markets have far outstripped wage growth, and so on and so forth. I think that there is a kind of inflation that can start to reverse that. Okay. I think inflation can actually escape asset markets. It can find its way into commodity speculation and into goods and services prices. And all I would say about that is, while for a lot of people, particularly at the bottom, that's going to feel very nasty. Okay. If milk prices, double in 6 months or what have you, these are not nice things. That's a bit extreme, but I'm just sort of saying. But what you can start to get, and this is interesting, there was an article posted on Twitter, I think it was by CNBC or Bloomberg, that one of the benefits of inflation is going to be that wage growth picks up. And it's sort of been very vilified because it's very tone deaf, because actually, come on, there's no benefits of inflation because the cost of living goes up. So if your salary is going up, but bread prices are going up, you aren't really benefiting. That's true. But
who gets the raise first, right?
So who gets the raise first? I also think that the inflation that can flow into goods and services is really an overdue fruit of the policies that have been followed for very long, that have been creating these major distortions, right? So it's actually a rebalancing process. Now, I'm not naive enough to think that in that rebalancing process, when asset markets collapse or let's just say stagnate, and goods and services prices go up and wages and salaries go up and so on, I think that is actually going to benefit, going to have some benefits for the man in the street. I actually do think for certain people that's going to be the case. It's kind of a normalization, a bit of a correction from these insane asset price inflation periods that we've had for the last 20, 30 years or generation. However, elites are very wily, and they're very smart, and they're very connected, and they don't like to lose, right? There's status to be lost. There's lifestyle to be lost. There's all these things. And so as a backlash to that, you then can get all kinds of additional distortionary policies that sort of come in. So that's a messy future. And I think that the next 10 years at the very least, the 2020s, to me, beyond it, if we get through it, I think can look really, really fantastic. But I think the 2020s itself is a bit of the valley of the shadow of death, right? I think it's going to be messy. I think it's ugly. I think it already is ugly. Everyone's fighting with everyone. Politics is an absolute mess. Geopolitics is probably, the least stable that we've seen it for a generation or so, or certainly since the end of communism. Things are very unstable. Things are very uncertain, trust, I think here's the key point, is institutional trust is just about evaporated. No one trusts anyone when it comes to health, public health, money, finance, general information dissemination. It's all up for grabs, and it's all kind of in dispute. And so what's the takeaway here? I look at all that, Bronwyn, and I kind of go, when the world's gone through similar gyrations, what we might think of as like fourth turning periods, turnings, we don't know how they're going to pan out. We don't know easily who's going to win on the other side of that, right? It's easy sort of to say, well, China wins on the other side of this, but like maybe not. This is a complex, very complex kind of process. So we don't know who wins on the other side. What we do know, we can draw some historical principles. We do know that these periods tend to be scarcity inducing, right? Because things are not just smooth. We don't just have nice peace and prosperity and easy production conditions and so on. So I think scarcity is a big watchword that people have to.
Real scarcity.
Real
scarcity over the real things that you really need. Yeah, I agree with that thesis. I think that's pendulum's going to swing back. The stuff you need, water, food, power. We know this all too well.
Correct. And so it's a world of real scarcity, and it's also tends to be a world of monetary corruption, monetary distortion. And so the combination of those two is that these sorts of periods tend to be inflationary. They also tend to be conflict periods. So wars can happen. I think the kinds of wars that we're staring at are probably underway already. There's a huge kind of cyber dimension to that. There's a major information propaganda dimension to all of that. We're in that. That's happening right now. And again, I think that induces scarcity, because if you think about it at a very meta level, yes, conflict, but also signal distortion, right? So one of the things that markets really rely on, right, is clear signals, right? For me to produce, sell, trade, I don't need perfect signals, because there's no such thing, but I need like relatively clear signals, right? I need my prices.
You need confidence that your choices are going to pan out and to benefit your future. So if you don't have confidence, you get inertia, then you get disinvestment, which is a vicious cycle in and of itself, which sort of perpetuates your expectations. So yeah, without confident expectations, things fall apart.
And that gets informed by clear signals, right? In a very Hayekian sense, like we need these price signals, we need good interest rate signals, we need good feedback from reality, and the abstractions that we get from reality need to be reasonably accurate, right? In the form of data, in the form of information, in the form of kind of all these things. When you have major information scrambling going on, when you have major policy distortion, price manipulation, but then also actual information scrambling, which we very much have right now, how do you act? How do you act confidently in such a world? Now, so at the margin, I think investment confidence has to subside, has to be curtailed, and just generally the confidence to act with a future orientation has to diminish. And so you get what is called a raising of time preferences, or a shortening of time preferences. That diminishes investment, diminishes community formation, diminishes the ability to say, hey man, we're going to build a school because we really believe in the future here. Everyone tightens up, everyone goes into their shells. In a way, lockdown is like this very
representation of what's going on.
It's like this very tangible representation of our lives actually getting smaller. Travel restrictions, vaccine passports, all kinds of things where you can see a physical manifestation of this sense in which we're actually turning inward and getting less expansive. Now, we could have a 3-hour discussion another day about some of the cultural implications of this, some of the healthy stuff that can be entailed in these kinds of trends, to more localism. Maybe we overextended ourselves from a globalistic perspective. All these things are up for discussion. But what is certainly true is that the near-term effects of this are tremendously disruptive, and surely, from my perspective, disruptive to productivity in general, and that means a world of greater scarcity, and the only way to really kind of mitigate that, if I'm right, so that it doesn't spiral into a world where living costs just absolutely run away from us, is the effectively the same thing, which is that we make our lives smaller in response, right? So we're not producing as much stuff, we're not as wealthy, we're not as abundant. Life gets more expensive to do all these things, and so we kind of just voluntarily choose smaller lives, and so we feel like things are okay. We feel like living costs are not running away from us, but we've crimped our expenses. We've made our lives smaller. We don't have that holiday
what
to
our parents had. We don't have what our older siblings had.
We don't.
It's okay. It's okay because we have.
It's okay. We tell ourselves, we've got we don't have a speedboat, but we've got like really cool apps on our phone, so it's fine. We've got all these amenities.
Confidence creeps up on you slowly, right? I mean, it's if it happens, if your erosion of your life's living standards happens over a long enough period of time, we can justify it. We can tell ourselves stories about how it doesn't matter. And in fact, we will tolerate it as long as the people who are on the same level of us to start are falling with us. What we won't tolerate is for our nearest and dearest to get richer while we get poorer. And that is something that I want to talk to you about today, because I have a sort of visual concept of a sort of line that was drawn through society over the last 18 months. If you were on one side of the line, you got richer over the course of COVID and lockdowns and everything else. And if you were on the other side of the line, you got poorer. But that line didn't cut neatly through a class or through a particular strata of society. It sort of wove its way in between families, in between friendship groups, in between people in different industries. And I've definitely seen in my circle of friends, I think I've got a more diverse circle of friends from a socioeconomic and sort of career perspective than a lot of people do. That people on one side of the line, that I'm just on the other side of the line, you had people that are now calling me and asking me for if I can give them part-time work. People that I used to, go out to restaurants with other friends who are just on the other side of the line, who are now looking to buy second and third properties in the Cape. And that was through no benefit or no merit or no punishment on either side of the line. But that line was so unfair, and that line cutting through friendship circles, cutting through peer groups, cutting through classes, if you want to put it that way, is what's going to accelerate social incohesion, because we cannot tolerate that. That's not how our sort of mimetic species works. We can't tolerate losing. We don't mind if everyone else is losing. Unfortunately, I do like to say that envy does make the world go around. It seems to be the primary emotion behind everything. Whether you're talking about fear or greed, underneath it, there's a whole lot of envy. And that is probably going to accelerate a lot of social disruption. Poor people that have always been poor tend to accept their lot a lot more than someone who started out middle class and is falling. You can see this with even wealthy middle class educated elites that are not able to maintain their former living standard according to their peers. That's where social conflict really starts to break down. I think we're going to see a lot of those effects over the next 18 or so months.
I totally agree with that. I think that the one thing I would qualify on what you've just said is, I actually think we can handle disparity quite well. And I even think we can handle quote unquote losing fairly well. I think humans who've been raised reasonably, respectably, can kind of handle that when it's just.
Okay, just when it's meritocracy.
Correct. So yeah. So when you kind of win, when you beat me fair and square in the game of life, let's say you have the bigger house, the nicer situation, but I can perceive that you've put in place wise practices and processes that I didn't really put in place. Most reasonably well-adjusted people don't actually mind that. I don't think that's the source of social conflict. I think the source of social conflict is injustice that creates inequality. It's the unfair
manufactured inequality.
Man-made
stuff.
Man-made stuff. It's the unfair dimension to it. And as you've pointed out, you come into this, you happen to be a restaurant owner, doing your best, and you just get absolutely smashed,
and your brain's got an ad agency and he's doing just fine.
And you
Yeah.
see your friends who work in the finance sector in the middle of Santon, and they're getting bonuses because equity markets, are up 30%, right? Again, through no great skill of their own. So no, this is another way of describing the problem we've been talking about. And I tell you what's really disconcerting to me is not only have we so most of this that we're talking about, I think, has been avoidable. Certainly in the last year, the COVID stuff, I think the way it's been dealt with, the virus does what the virus does, but our response to it
has been unfair.
That's
the line, the line was some people were in choices that benefited some to the expense of others. And we do need to separate that. There's a natural disaster, which I think people again accept, some things are going to happen, some harms are going to happen. But when those harms are unfairly distributed, deliberately through policy choice, not through natural disaster, that's when resentments creep in.
Well, a great description of lockdown was making poor people work their jobs so that rich people could stay at home and be safe.
It worked very well for some people.
I mean, because you don't just lock down. You have to make stuff. Stuff has to get to the shelf so that you can go and buy it when you do your little outing to the shop. So yes, I mean the as my one friend calls it, the laptop jockeys were able to just stay at home, and we're probably in that class, Bronwyn. Able to work from home, able to continue to provide services to our clients online. In fact, in many ways, my life got a whole lot easier last year because I was able to be very efficient in the way I provided services. Clients enjoyed that. So no, I think now here's my concern is so we've done that. We've taken a sledgehammer to the complexity of the social order with things like lockdowns. I'm gravely concerned that we're about to do it again with something like vaccine passes. And I use the word pass rather than passport because I'm really worried that we are starting to develop a two-tier system internally in countries. Now it's in its early stages, but I mean, we know for certain that there are loads of people who are keen for this kind of regime. And so you're going to get people cut again across another dimension. People who don't want to take the vaccine, people who, for whatever reason, don't think it can't, don't want to, don't get it, whatever. And perhaps don't even need it because we know from a risk distribution perspective that young people don't have a problem with COVID, and if anything, if they contract it, just build up natural immunity, which probably stands them in good stead for the virus going forward. But I'm really concerned. So we've seen this division come through with something like lockdown. Okay, this just cut through, as you say, families, class lines, sectors, all this kind of stuff. Now we're wrenching another dividing line potentially through medical interventions or through a kind of medical status that is going to cut through communities and families and sectors and so on in different ways.
For political reasons and for practical reasons, it's a conflict point.
Correct. And so I look at all this and I mean, I can see a whole bunch of other ones waiting in the wings of these conflict generating interventions. And I got to say to myself, like, I don't see social cohesion improving in the next 5-10 years, right? I can see much better arguments for a decay in trust, in social cohesion generally. That's got to have production consequences. It's got to have consequences for economic exchange, for productivity, and then ultimately for policy and inflation. And again, a world that's getting more distrustful of itself, and communities that are getting more distrustful of themselves across very unfamiliar dimensions, that's got to induce lower productivity, as far as I can tell. So again, I mean, this is like kind of bearish and gloomy and pessimistic, but you reap what you sow. And if you approach a complex organism, which is a society, and you take a crowbar and a sledgehammer to it, you're going to expect certain consequences, right? That's what That's what a lockdown is. It's a sledgehammer. It's not a fine-tuning instrument here, right? It's not like distributed risk management. You know, the asymmetries in COVID risk are stark. Let's nuance the approach. You know, the Great Barrington Declaration was about nuanced approach. You can disagree with it, but it was aiming at pluralistic solutions. It's not one size fits all, guys. I mean, like, there's a reason why we have that cliche. One size does not fit all. That's because it's true. And my concern with the zeitgeist right now is that the ethic of conformity, centralization, sameness, one size fits all, approved protocol, gate-kept solutions, you know, all this stuff, we've seen this in spades in the last 12 months. I mean, we were seeing it before, but it really came to light in the last 12, 18 months. And to me, I think what people don't realize is that because society is so actually pluralistic and complex and different, when you try and impose one idea on everyone, you're going to create major divisions and conflicts. And I just am really concerned that we're bounding down these roads and creating substantial conflict down the line. There is complexity being unleashed here that I don't think is well understood. And the last point on this, you know, you've got guys like Nassim Taleb, very smart guys who understand things like tail risk, low probability, high impact events, right? And so they looked at something like the virus and they said, well, you know, it's maybe a low probability that it's catastrophic, but if it is, it, you know, wipes out the planet or whatever. So we need to take certain actions. And my criticism of that type of precaution is that the actions that have been taken themselves are subject to the kinds of complexity that Nassim Taleb was worried about with the virus, right? And in some ways, I mean, the virus is certainly a complex thing, but in some ways, the social systems that we are now tampering with globally across all these different dimensions and spectra are arguably infinitely more complex. And I think we've been blasé about how we have tampered with that complexity, and that concerns me quite a lot.
Yeah, I think it's an important point to make there that you can be absolutely pro taking precautionary measures like doing social distancing, but still legitimately have a problem with legally mandated one-size-fits-all lockdowns. Likewise, you can be completely comfortable with medical interventions and with getting vaccines and even highly enthusiastic about such things, but at the same time be highly skeptical about things like vaccine passes and vaccine passports, because that's got nothing to do with medical science. That's got only to do with social coercion. So I think it's important to make that distinction, because my perspective is those are good things. And in general, we should, you know, applaud science when it does good stuff for us and absolutely go ahead and do what is best for ourselves and protect ourselves, protect our communities. But adding layers of coercion to that actually end up backfiring, because as soon as you have to force someone to do something that is in their own best interest, you unfortunately also unleash questions into that person's mind. That person thinks, if I'm a reasonable human being, I would have done this anyway. But now that I'm being told to do it, it makes me question whether it was in my best interest to start. I think that's just human nature, or maybe that's just me. I do know a lot of people, as soon as you put a direct rule in place, you actually undermine the legitimacy of taking that responsible action for themselves. Of course, huge amount of criticism has come my way for these sorts of comments, but I don't think that I refuse to be pigeonholed into a box where someone's going to say that because I disagree with forcing someone to do something in their own best interest, that I do not agree with doing that good thing. I think we have to be able to separate legality from the actual act. I think that so many of these conversations are conflating those ideas, and it's a very, very dangerous distinction. And a society that submits or encourages coercion for good things will also, unfortunately, likely submit to coercion over bad things. It's a very slippery slope, and we have to be very, very careful about wielding law and policy as a blunt instrument and not respecting people as intelligent thinking
Absolutely.
beings.
No,
that's of course the grand irony with sort of, you know, collectivist versus more individualist thought, right? I mean, if we if we are so stupid that we need someone to tell us what to do, then how can you trust us to choose the right person to tell us what to do? And isn't that person that's telling us what to do stupid too? Conversely, if we are responsible, then we don't need to be told what to do. So I think there's an interesting conversation to be had there, but I'm so concerned with the way we're having these conversations that you want to put people into political boxes, label people as being anti-social good when you're just trying to criticize coercion over functioning adults.
We have a lot of broken debates at the moment. Vaccines is your quintessential broken debate. Climate change is probably a broken debate. There's a few that we know.
Yeah, you can't take a nuanced position. You're either for us or against us.
Yeah, and
both of those are bad positions.
I think you made a really good observation there, which I was going to latch onto, which is just that it's actually really sad because you end up tainting what could actually be celebrated. And by the way, this is kind of a classic example of a big turning event, right? We fight over everything, even things that are ostensibly really great solutions. So like this vaccine, right? I mean, now there's big question marks. There's big question marks over its long-term safety because we simply can't know it yet.
We don't know.
And so there's an emergency authorization, and you've got to kind of take a risk, right? If you're old enough and the long-term stuff therefore doesn't maybe impact you as much, and you're really worried about COVID risks, you can go ahead. For someone younger,
emergency authorization was a good thing because it gave people the choice to take control over their own risk profile. And I'm so pro-choice. I think it's fantastic to be able to give people the choice to choose their risk and to choose what they want to take on. I think that's fantastic. But we need to apply that same logic to, I suppose, other people who want to make different risk-based choices. And we can't judge people from a moral perspective for that.
So what happens with something like vaccines is, instead of celebrating a potentially really excellent breakthrough,
absolutely,
we end up having a fight. But the fight is justified by people nudging, coercing, forcing, vaccine passporting, all this kind of stuff. As you point out, the minute you want to go there, then I'm on the defensive. I'm a natural contrarian. I'm on the defensive. I'm going, whoa, hang on a minute. Like, that wasn't part of it. If it
was so good for me, why are you making me do it?
If it's so good for me, it's going to be super obvious. If it's so good for you, don't worry about me. And there's all kinds of things one could get into on that. So I think, I think this stuff is hugely significant. We've taken a sledgehammer to the social order, and we've done it in a very rapid, short space of time. And a lot of people can't actually cope with that. I think that this is another dimension of this, is that, societies change and evolve over time. We do have events throughout history that are step change events, and a lot goes on in them. And, if you go back and look at those periods of time, some people thrive through that, and some people absolutely fall off the wagon, and I think my concern is that we're at risk of sort of doing that to ourselves in a very conscious way now. I would have hoped that we had the tools, the history, the understanding to sort of look at all this and go, right, guys, let's just slow things down a bit. Let's calm down. Let's allow organic society to respond to a complex problem and to the various complex problems we have. Instead, we are trying to force everyone through the same little eye of the needle, as it were. And that's just not going to end well. I mean, to take a vaccine pass system as one example, I think that has the potential to be probably the worst idea of our lifetimes. It's
not just that. It's not just the vaccine passport. As soon as you got that sort of passport, it's a biometric passport, and the opportunity for totalitarian abuse from wearing. Absolutely. If you just have any understanding of foresight or human nature, it doesn't take much imagination to see how such things get rolled out against our own good. So we have to separate the idea of the coercion from the act that we're trying to incentivize.
Let alone how something like a biometric system can be linked completely into a digital currency system, can be linked, so now you can track someone's health
Wi-Fi
state.
curtain.
you can track someone's spending. Are they carbon compliant in the way that they, express their tastes and preferences?
We've already got those popping up in Europe, carbon credit scores for employees.
Yeah. And we know that a lot of what China has done, the Western governments greatly admire. I mean, they might not admire the hyper centralized authoritarian kind of nature of it, but they certainly find social credit scoring, technological convergence across all these dimensions very interesting and compelling from a population management perspective, from a power acquisition perspective, from a technocratic sort of desire. These things are all, I think, very interesting to a certain elite ruling class. You don't even have to posit a big, scary, sinister conspiracy theory about this stuff. It's just some people see this as a very compelling way of efficient governance, right? They don't view it necessarily in the way that with the suspicion that you or I might view it. So I mean, part of the challenge here is that we've got a lot of people acting in good faith in a way, but I think just with really big historical blinkers on and not quite seeing the bigger picture on this thing. So yeah, I think this is all super concerning. And I, for me, I think we have to fight from an activistic perspective. We speak about positive and normative perspectives on the world. We can describe the world as it is, and it's a little bit bleak. From a normative perspective, we can start to think about how we would want to reform and change things. We've got to be really intelligent on this, because there's a whole lot of social layers that we've got to try and cut through on this to reach a place where we can agree on something very constructive. Certainly, I would hope that appealing to people that, because there's a lot of people gung-ho for not just vaccines, which is absolutely fine, but for a passport system, because they feel threatened in various ways. And I hope we can convince people and talk people back from that ledge. Because once we go over that ledge, I think it's going to be extremely difficult to unwind. And you could have a large plurality of society who chooses not to get vaccinated, for example, basically increasingly shut out or adopting or just moving into a different tier of existence. And I just don't see this as being healthy in any way. I hope I'm over-exaggerating.
I can even add another layer to it. I think that there are people that need the vaccine, that would benefit from it from a quantifiable sort of cost-benefit perspective, that are hesitant to get it because of threats of things like vaccine passports. Yeah, I'm happy to get the shot. I'm not happy to get my name on your database. I'm not happy to carry your card. And I think that is an elephant in the room, that people that are wanting this pandemic just to be over, that's what people really want. I completely understand why people are accommodating of more coercive ideas, anything to get us out of this, anything to get us back out into nature and back traveling to whatever we were doing as millennials or whatever else on Instagram, anything to get our lives back. And I think that they don't understand that by forcing people, by encouraging any sort of degree of coercion to creep into conversations of things of this nature, they're actually probably undermining their own cause. It's just bad marketing.
It's sort of the
bad marketing.
and isn't it the classic security freedom sort of trade-off? If you adopt, I mean, this is one of the brilliant features, one of the brilliant strategies of totalitarian programs is to sow fear, right? Is to sow the idea of threat, create threats, create as many as you can, and sell a central authority as the solution. And this is how you can enslave a lot of people. And I mean, this is not, again, this is just like pretty standard history. I mean, within our, maybe not our lifetimes, but certainly within the lifetimes of our parents or grandparents, we've had, mega totalitarianism. I mean, the Soviet Union only ended, in the late 80s. So like this is contemporary history, and we're kind of, I feel like we're making
we have
many
short memories because we didn't
memories.
live through it. We don't want to talk about it. Yeah.
One of my friends on Twitter the other day said, you know, I've heard about not learning from history, but like this is not learning from last week. You know, I mean, this is super recent and contemporary history that we're just sort of throwing aside. So yeah, very concerned about the safety culture that is being generated here. Really concerned about children being raised in a hyper safety culture and just the kinds of citizens that they're likely to be. I don't know what that's going to look like. Do they rebel at some point and go absolutely 180 from the other side? Certainly possible. Do they become very compliant adults and sort of just aid and abet ongoing, you know, the ongoing nudging state and the nudging oligarchy, as Ben Hunt would call it? I don't know where this all ends up, but what I do know is that I can try and lend my shoulder to the wheel a little bit in helping change people's minds, and I can conduct my own life and raise my children in a particular way that tries to create balance and a bit of perspective on everything, and you know, that healthy degree of contrarianism that I think we all need a little bit these days.
Yeah, I think at the moment the world has a contrarianism shortage, although you've got a lot of TM brand contrarians with the capital C who just disagree with anything, which is also not very contrarian when you actually get right down to it, right? So you don't want to be a contrarian for contrarian's sake, but rather, I think it's not even about being a contrarian. It's about actually having values that you've sat down as a fully functional adult human being and thought about, and not compromising those values based on, you know, as the zeitgeist shifts from left to right, up and down.
Yeah.
What being a contrarian is standing still when everyone else is switching positions. I think that's my definition anyway. So I've had these conversations with a few people.
If you think about what internet world has created, I mean, look, it's a bit of both. It's shown us this immense diversity of thought on the one hand. On the other hand, it's kind of caused us all to converge into fairly homogenous patterns of thinking, right? Like
it caused us to merge into caricatures. So you've got a caricature set. It's not one homogenous group, but it's a couple of sort of a nesting doll set. You can pick one or two or three of these avatars, and that's
correct. Yeah, that's true. And then there's certain things that certainly from a mainstream perspective, you know, there's only one acceptable opinion to have. There's only one acceptable opinion about Black Lives Matter. There's only one acceptable opinion about COVID. There's only one acceptable opinion about X, Y, and Z. And so I think the next big challenge, and probably the gyrations that we're going through now, is the shattering of that a little bit, is the rediscovery of truly diverse thinking. And we're probably feeling the birth pangs of that a little bit, because there's a lot of powerful people who benefit substantially from the groupthink. You know, it's not a conspiracy. It's just incentives. You know, as you know, show me the incentive and I'll show you the action, as I think you like to say. So so there's a lot of people who benefit substantially from a particular way of thinking about the climate. Like, for example, we know that there's massive industry around this. There's a consulting industry around this. There's a green subsidy.
The ESG stock scams from the investment funds that are petro companies rebranded as ESG.
All this stuff.
Yes,
I mean, it's
many terrible incentives.
It's a huge bandwagon, and just having that shattered open, not that the views that drive that then suddenly become illegitimate and no one thinks about them, just that there's another 10 views that you can now adopt, or 400 views that you can now adopt on that particular issue, because it's highly complex. And that, of course, begins to smash open some of these scams, these grift scams that we see in some of these things. It starts to break those open, and that's another part of the process of breaking down this oligarchification of society, of the finance sector, of the economy, of all this kind of stuff. And that's why, in the final analysis, I think that we're going through a period now that's very ugly. It's not pretty. It's contentious. It's angry. It's blimmin' exhausting. It's all these things. But I kind of feel like it's necessary pain that we've got to be going through to produce, and if I may be slightly Hegelian here, to produce a kind of synthesis on the other side that is workable, that is sustainable, that is peaceful, that is cooperative. The world's basically just gotten into a frenzy. It needs to thrash around and work that frenzy out, and then we get to somewhere better. And there's no guarantees in the interim of how bad that could be. You know, historically, these sorts of turnings, they can be mild or they can be exceedingly ugly. And we've just got to
And they can be drawn out, or they can be short and sharp.
They can be drawn out. And, you know, I suspect we're quite far into this turning already. But what is 10 or 15 years on the long timeline of history, right? It's a blip. So it's quite possible that for a very long time yet to come, we have to manage a world going through very profound tensions, divisions, reconfigurations, you know, all this kind of stuff, in ways that, you know, it would be easy for a skeptic watching this conversation to say, well, isn't that history? Isn't that just what happens normally? And I don't think so. I mean, clearly there's always change. Change is a constant, but I think the kinds of changes we're experiencing, the sort of crowbar sledgehammer that's being taken to the social order, the change of, certainly in my lifetime, what I've known the world order to be, that's all kind of unraveling in very complicated ways in my mind. Whether it's monetary, whether it's political, whether it's cultural, we're going through a kind of a cultural revolution right now that's very difficult to understand and to grapple with. You know, so on just multiple dimensions, I think it's fairly obvious to me that we're experiencing something unusual. It doesn't mean that it's never happened in history before. I just think it's a less common sort of epoch that we're in compared to the day-to-day sort of gyrations.
Yeah, history happens in sort of bursts and starts. There are sort of, you know, decades when nothing happens, and then like a few weeks when a whole lot does. And, you know, stress points on history do tend to accelerate any sort of change. I don't think you can think of a bigger stress point than a sort of entire world on pause for a year, where we all get to sort of reflect our place in the world and what comes next. And we don't think that's going to lead to some dramatic changes. I think we haven't learned much.
Yeah, I think that to be unaware of that is to really have your head in the sand. So I think most people, I think that's probably a mainstream view right now, that most people think, well, you know, this has happened in 2020. The world's changing. Great reset, you know, build back better, you know, end of the world, apocalypse. Everyone's got their view on how it's going to change profoundly. Very few people, I think that we're just going to sail through this into something normal. Maybe that's an opinion we need to take a bit more seriously, because maybe we overhype the change. But be that as it may,
it's not really about different, but about getting to where we were going a little bit faster. From my perspective, I think that a lot of the things you're talking about, you can trace it back really to the Nixon era. I think that's when things really started falling apart, or at least when the turn started turning, and it's been turning for quite a long time. Slowly.
Yeah. So I think 2020 certainly I think was an accelerant. You know, pre-2020, I wrote some articles for clients called I think I called it Global Scarcity, or 2020 is the decade of scarcity or something. This was pre-COVID. And I already felt that we were moving into a phase of scarcity for a lot of the reasons that I've described in this conversation so far. And then COVID came along and seemed to just squash 5 years, maybe even 10 years, probably 5 years or so into one. You know, I think we really raced ahead last year in terms of this change and this transition that we're going through. In some ways, and maybe that's where we can think about accelerationism a little bit. There's something to be said for getting things done quicker, right? If your country is going to have a failed state, let's say, which is a relevant topic for South Africans, if you're gonna experience the failure of a state, would you want it to happen over 20 years or over one? Now, I mean, there's lots to unpack in a question like that, but the benefits of the 1 year failure are kind of like the benefits of the rapid bankruptcy, the rapid liquidation. We get it done, we sell off the assets, we learn our lessons, and we kind of move on. The slow zombified sort of decay, where you never quite die but you never quite live, is a huge consumer of capital over time. It consumes energy, lives, in terms of lifespans lived in this zombie process. It creates ongoing social conflicts. There's just so many ways in which I see the prolonged process as suboptimal. Now, there's counterpoints to that, because in the longer process, you have time. You have time to pivot. You have time to sort of prepare. You have time to do various things. But I think we're at a point now in South Africa's history where I feel like we're all kind of hoping, not in a catastrophic way, but we're hoping for things to move along a bit. Yeah, like let's flush out the bad. Let's have that cathartic event quickly, and sort of figure out how to move on from there. And I think that's probably true of what most of the world is feeling like. There's a sense of really unbearable sort of purgatory about a lot of what's going on.
There's a sense of a price that has to be paid, and that's, you can either, like, you've got some people that are trying to push that price or that bill, that reckoning further down the road, and there's others that are preferred to pay it now, take the hits, and then move on. I think that's coming back to the whole conversation around inflation. That's what you're really talking about. So Zimbabwe happened sort of catastrophically, very quickly. It was in economic sort of time scales, it was a pretty fast unraveling of an economy. Whereas what's happening with the dollar is a slow erosion of wealth. It's a slow steal. But it's no less of a crime just because you're taking a few coins out of the jar every week, as opposed to sort of just running off with the whole piggy bank, which is kind of what Zimbabwe tried to do. So it's a less dramatic story, but it's no less devastating. And that's why there perhaps is an argument that if we look 50 years into the future, that Zimbabwe might have a more optimistic generation, in two generations' time, than what America might. And that's I think the real conversation. It's not about scaring people right now in the United States about scary inflation, because that's where these conversations, just like the vaccine question or the lockdown question, unravel into nonsense very, very quickly, because no one can actually talk about what they're really talking about. It's like, you're wrong, there's not hyperinflation, in fact, this piece of steak, people are posting pictures on Twitter, is like $2 cheaper than it was last year. That proves there's no inflation. It's not about that. It's about, is there a theft going on? Is there a bill that's going to have to be paid? Is there a debt that is going to have to be reconciled? And those are facts. We can kick cans, but sooner or later, someone's got to pay for the deal. I mean, like, once the cake is eaten, there is no more cake.
You've laid that out super well. And just to kind of warm to that theme very briefly, like, you can play with economic data from now until next Tuesday, and smart people can cherry pick and show. I mean, I analyze data for my clients for a living, and I've done this for a long time. You can tell stories with
numbers
data.
Are very pliable.
Numbers are pliable. So, but like, how good was Obama's presidency? Because the narrative on that, it was amazing, right? Obama was just wow. Well, Obama's presidency was so good that like half the country was radically compelled to vote for Trump, and Trump's presidency was so good that that like Antifa rioters went absolutely mad through the course of 2020, across the cities in America. Like, the social forces and the political forces that play out in reality are way stronger indicators than data that can be kind of manipulated on how much a steak costs today versus yesterday or whatever. And I just think that, to me, it's unmistakable that as we look across the globe, we have got conflict. I'm not saying it has to be this way. I think it's being largely manufactured. It's being pushed in this direction because of perpetuation of bad policies, perpetuation of unjust systems, as you've precisely pointed out. And so, like, from an economist's perspective, and just from a general analyst's perspective, from a futurist's perspective, you want to be broadening the, let's call it the epistemic range of insights, right? It's not just what did GDP do last quarter, it's like, what are we seeing in the social fabric here? How many calls for secession are there in the United States amongst different states? How divided is that electorate? I mean, if you look at various metrics of division, I mean, it's super divided, way more than it's ever been. Why is that going on? And then all sorts of other dimensions. So the dysfunction of the system, there's a lot of guys who want to talk about how great the world is getting. Lots of, and I admire this because some of the data is real. A lot of their data is legit. Showing human progress, showing how poverty's been reduced over the last 30, 40 years, showing how much better life is getting on so many dimensions. A lot of that is absolutely valid. A lot of it is obscuring of some of this kind of insidious cancer that is growing and metastasizing in a lot of countries, So we have this sort of outward display of some kind of material prosperity in whatever way, shape, or form. But beneath it, suicide rates are like climbing rapidly. Drug addictions are off the charts. There's a darkness lurking there that is easy to suppress in a lot of the top level data. But when you really look at some of that stuff honestly,
look at the trends, what the direction, where we're moving from, where to where, where's that pointing?
We're not in great shape. And like quickly on this, like a lot of people will say with South Africa, like, why are you so gloomy? Compare South Africa to what it was in the 1990s or 94. Compare the average, life of the black South African, now versus then, and that's valid. Yes, there's been an improvement, but then you say to them, but have
it depends which dates you pick. Yes,
sure.
End of apartheid is fantastic. It helped a lot. But if you're picking the last 20 years, we've had a problem. And that's a different conversation. Again, you can get drawn into disgusting arguments that are not about what you're actually talking about. At some point, the trend turned. It stopped getting better and it started getting worse. And why did that happen? And when did that happen? Being honest about that is the only way to fix anything.
Exactly. No, 100%. And so I think being sort of honest and rational about the trends, about the data. And this isn't easy for everyone because people get emotionally tied to stories, and we all do. I do too, you do, we all do, to try and emotionally detach a little bit because, a lot of people bought into the new South Africa story for all the right reasons and for some of the wrong reasons, but whatever it was like, this is absolutely amazing. 10 years in, it starts to change. It starts to morph. A new reality, an emergent reality comes in, and the track record, whatever you want to say about it, we don't have to get into all the politics. The track record ain't good. South Africa's gone at the very least sideways for a very long time and probably regressed on a whole bunch of dimensions. And a lot of people misdiagnose why. I think it's generally accepted that that's happened. There was denial of that for a while, and the odd person tries to deny it still. But basically, there's been no progress of any material sort. And then trying to diagnose
the things that matter, not for the young people, not for getting children to be able to be literate, not with getting jobs and opportunities for young people to get a share in the economy. We're talking to Charles Davidge just on the last episode of this, and it's about you have to get people invested in the upside of the economy in order to get them to buy into society, really. And we failed at that.
So I mean, if you look across a number of regions of the world, things have gone sideways for actually a very long time, sideways or worse. Europe is kind of like that. The last 20 years have been the epoch of Zimbabwe and Venezuela. And I mean, yes, they're just two countries, but they're two substantial countries. Venezuela's 40 million people, somewhere thereabouts, I guess. I mean, it's been an utter calamity. Argentina hasn't been fantastic. Brazil hasn't been fantastic.
They're a slow disaster, not a fast one, Argentina.
And South Africa has joined that mix. America, top line numbers have kind of looked reasonably good. The gloss, the S&P 500 is higher. all these kinds of things. But as I say, drug addiction, suicide rates, political divisions, just all kinds of things. Life expectancy going down in the United States and in a lot of states. So and then Asia. I mean, Asia's a mixed bag. Some absolutely dynamic places that have been going ahead tremendously well. In other instances, a place like China, again, top line numbers, huge demographics, massive population, but in the last 10 years, politically, it's regressed, substantially. And so you can kind of go through a lot of places. It's gloomy in a sense, but I think it's important just to be honest about the fact that, hey man, history is not this beautiful linear upline that just carries on. We have serious periods of regression, of decay, of capital consumption, of injustice, of conflict. I think we're in one of those now. I think it's important to recognize that and not kind of try and gloss over things. Yes, poverty rates have fallen because India stopped being socialist and China opened up its markets, and that's wonderful. I'm glad that those things happened, but let's not pretend that it's all just kind of hunky-dory globally. The West in particular, and South Africa as a sort of quasi derivative of the West, if you like, and Southern Africa, quite frankly, in real bad shape. And I think the sooner we can get honest about why, the better, because then we can really start to move on and construct things. And so for me, without being sort of fatalistic or nihilistic about it, I'm in the accelerationist camp, Bronwyn. I sort of want to see things decaying fast because
they can get better again quicker.
They can get better again quicker.
Try again.
And when you do the slow decay, you sort of consume up all the capital. It can be the most devastating kind of decay. Whereas the quick
psychologically, a long war is much more destructive than a short battle.
Yeah, absolutely. So I would like to see us getting through this quickly. How that happens, I don't know, because of course political incentives are generally aligned to hang on and cling on and kick the can and sort of avoid the calamity, because that's career suicide for politicians and so on. So, we do find ourselves in this kind of stalemate a little bit, the stasis and this kind of slow degradation. And I suppose the upside or the silver lining is that you get accelerational events like a COVID, which no one's asking for, but if they come and they get a certain reaction, it can push things along a bit. And I think this has pushed our societal consciousness in a direction where it's like, hang on a minute, institutions are not what we thought they were. There's a lot to distrust about what's going on. And people are starting to, I think, take proactive steps in relation to that realization, building their own institutions, building their own alternative platforms. I think you've often said, if you don't own the platform, you don't own your service, right? So what does decentralizing platforms look like? What does the decentralized, secure internet look like, so that you can't be deplatformed and canceled and all these kinds of things? Not a easy process, but ultimately surely healthy for the long term, for our long term kind of existence. So again,
something's got to give eventually, and no institution, whether it's a virtual commercial platform or whether it's a government that gets too big, sooner or later these things implode upon their own size. I mean, nothing scales perfectly, and eventually things break when they get too big.
So broad principle here, so that I don't sort of chew the hind leg off a donkey for too much. Broad principle is, for a host of reasons, which is a whole nother sort of podcast, we've gotten to a place, we've discussed some of the reasons now, we've gotten to a place where we're in bad shape, and we need to get through this as quickly as possible, learn the right lessons from it. And I think these travails that the world's going through can set us up, and I think ultimately will set us up for a very good period afterwards. you know, if the long span of history is any guide, this is going to end well. Okay.
Yeah.
Being bearish on long-term history is not a smart play. Okay.
No, likewise, being overly optimistic about the short term can be naive.
Yeah.
I
Yeah.
completely agree with you. Long-term optimist, short-term realist, let's say.
Yeah. And I think that was Murray Rothbard's great quip. He was like, I'm permanently bearish on the short term and I'm permanently bullish on the long term. And I
I'll
think
be
that's
right
about
at least half of the time.
Yeah. Yeah. So that's where we are.
Thank you very much. That was a very long conversation. So do you want to have any closing comments, anything you want to explain or elaborate or clarify? If not, let people know where to find you.
Yeah, I don't want to put your listeners or your viewers through much more pain. There's enough pain out there in the world at the moment. Yeah, look, I mean, in terms of my own trajectory, I'm moving across to a business advocacy group. So I'm moving out of hardcore kind of analysis for professional investors which is a more positivist description strategy role, which I've thoroughly enjoyed. But I'm changing pace and just tack and moving into a more kind of activistic and normative space to actually try and influence the trajectory of policy, to help our members at Sakeliga to develop smart state-proofing strategies to be resilient. So yeah, to kind of get my hands a little bit more dirty on kind of practical strategies around to navigate the world that we're in. So I'm looking forward to that. Watch this space. I start in September. I've got a lot to learn in that new space. I've got some great colleagues to work with, but yeah, I look forward to that. And that's what I'm up to.
Thanks so much for your time. And I like the way that you've done that, starting with understanding the world first, doing the work there before you get into trying to change it. I think there's too many perhaps individuals and institutions that have no empirical understanding of the world they seem to change with their ideas. So at least you've done it the right way around. Hopefully you'll have more success.
Yeah, I hope so. I'm under no illusions as to the size of the task, but I'm one extra shoulder to the wheel, let's say. So hopefully that works.
Thank you so much for your time.